Hi everybody, welcome to another update on the stock screener. Today we're going to talk about Nevada Copper. I looked at this company 2 years ago. I wanted to check on them. I said it was not a good buy. It's down probably 90% since then. Let's see what happened. So 0.083 is the price. Times the shares. So how many shares are outstanding now? 1.4 billion. That's a lot. Million, billion. So yes, 116 million market cap. The equity was 400 million 2 years ago. Let's see what it is now. So equity is now lower by about 150 million. So they still have not been able to make money. That's not good. What has happened? So this is from September. Equity is 251. Let's look at income. Revenue. Still zero. Amazing. What on earth is happening here? 2 years and they still have no revenue. Yeah, and then it's zero, zero, and losses of minus 16. Basically, it's still the same. Still the same losses, still trying to get into production, and still no results. Enterprise value is 18 million. Liabilities, yeah, normally you shouldn't take into account stream and royalty, but I will add it and assume no royalty in the cash flows. Just to make it easier. So 500 million enterprise value. Uh, yeah, because of the royalty and the long-term debt. Looks overvalued already. 500 million. Okay, so what are the interest payments? Nine months ended 25 million. Let's say 30 million. 30 million interest. They do have some costs as well. Um, yeah, but they have no production. So how do we do this? Are they going to go in production? Development recommenced last year, but development recommenced for 2 years already. Is this a 5,000 tons per day? Not sure. 50 million pounds per year. It's around the same as Trigon Metals at full production. Yeah, that could be true. It could be 5,000 tons per day at this copper grade. Yeah. Trigon Metals does 4,000 tons per day at 2.5 copper. So yeah. Okay, so this is like Trigon Metals, but much more costly at 300-400 million enterprise value. So just based on this alone, I think Trigon Metals is much cheaper. Okay, so almost done. Still developing. Okay, we have data, right? 54 million pounds. 54 million. Let's start with this. That's somewhere here, just at the start, and then they will ramp up later on. 54 million pounds. Yeah, that's still the same production profile. And at 1.7% copper. All-in sustaining cost is supposed to be $2. Now it's probably a bit higher, let's say 2.5, just as an estimate. Capex was 700 million. That's a lot. Yeah, but that's the second phase, I think. The first phase, not sure. There's no capex. There's no capex here either. They just do it and see where they go. And after the underground, and they have the open pit project, which is lower grade. 37,000 tons per day, which is very big. A very big mine. And these are the economics. Let's see if it's the same. 19 years, yes, yes. 163 production. Yeah, basically it's the same. It's the same chart. I don't see a lot of data here. I don't see any data. A very weak presentation. How much capital is still needed? I don't know. When is it going in production? I don't know. Let's see the news. Continuous ramp up. They are expecting to achieve nameplate capacity by the end of 2023. So basically, they are in production. Okay. Concentrate shipments are starting. They already shipped 446 metric tons. They also need to dewater like trigometals and are developing. This is all development ore and some stope ore. Okay. Some drill results. So they're going for the 5,000 tons per day. Okay. So basically it's in full production at 5,000 tons per day. Currently at 3,000 tons per day. Low grade ore, so it's still starting up. Copper recovery 87%. That's pretty good. So they're selling, and in November there's high grade. Fully online last year. There is still a delay. Okay, but what I don't know yet is what the cost. What's the cost of production? They don't give any data around that. See, only revenue, but no EBITDA or anything like that. That's a problem. They don't know it themselves even. They're just guessing around. There's some capex involved as well, 11 million, 50 million per year. So I expect around this amount of capex, just to be sure. Uh, let's say 40 million. Just to be sure. Tax rate, let's say 30%. So we have revenue, costs, copper price. This chart doesn't look good. Um, yeah, this doesn't look good. Maybe it's the capex that's too high. Let's say 20 million. That's still not good. Interests. How much debt do they have? 165 million, 16 million. Thirteen. Yeah, maybe this could be a bit lower, 20 million. But it should be around that level. It's still not good. Look at that. Maybe it's the AISC that's too high. But they said it was 1.92. So it should be, with some inflation, it should be at least 2.2. So I could use 2.2. And it's still not good. There must be something wrong with this NPV chart. I don't see it. 50 million pounds, yes. 100 million minus 40, 60 million. Taxes, 40 million. So it does have some. Oh, wait. Yeah, I took the wrong. Okay, that's better. Okay. So this is the situation. Without royalties added. So this is the enterprise value. So this is actually not a buy currently. Even if we say that they go into production, produce this amount, it's not a buy because the earnings are around 20 million. Still need to repay the debt of 180 million. That's 8 years that they need to pay, 7 to 8 years before the debt is gone. So I don't think they will have any expansionary growth that's possible. They still need to pay off all the debt. Maybe they can expand. There's absolutely no way they can expand. This capex is 600 million. So they will probably be producing only this part. This is not possible at all. So this is the situation. I can't buy this. Trigon Metals is doing this curve, and this one is just doing this. I actually think there is even downside risk because of the debt, and the cash flows are not good enough to pay that debt. Yeah, I mean, they could reduce the capex a bit. Once the plant is running. So let's say this can go to 50 million. Yeah, that's possible. Interest payments will go down if they repay the debt. Let's say like this. So in about 10 years, they will be able to repay it. But if everything goes right, it's still overvalued. So this is an easy way to look at if I should buy it or not. 13 years mine life. Okay, that's 13 years. So yeah, here you have it. Chart is created and it's crystal clear that I should not buy this. Capex too high to grow. This mine is just break even. Cannot go to the enterprise value. And needs higher copper price as well, because the copper price is now not even at 3.9. So not at 4.4 yet. Yeah, then it doesn't look that great. Okay, that was it. Nevada copper will probably continue its descent downwards. And we will see later on if I'm right. I'll see you in the next video. Bye.